as mentioned earlier, we are in an environment of a ceasefire. So we are looking at the DXY coming down. The strength of the US dollar is coming down, and we are seeing that translate into a bullish gold. Macro fundamentals are supporting a very bullish gold, a bullish trend for the short term, but we have to pay attention on upcoming headlines. Okay, if you look at the terms of this ceasefire, we are looking at very complex and very fragile situation. Okay, if any of the terms are broken, we might see continued escalation. And with continued escalation, we should see the bias totally flip from a bullish short-term bias into a bearish short-term bias. And being intraday traders, it is very, very dangerous for that to happen. Okay, as of now, we are still currently monitoring. We are leaning towards a more technical based form of analysis for now. Majority of the factor being that price is currently extremely bullish, aligning the technicals and the fundamentals are aligning itself for bullish entries. But before we get into the 15-minute level, let's quickly dive into what is expected from a top-down scenario. Of course, our daily swing high would be at the 55230 level. 5235 level will be our daily swing high. If we are taking the external swing, meaning this high to this low, this high to this low, we have approached the 0.5 external range. Because if we are honest, all of this move right here, since we failed to create a newer high, all of this move right here is an accumulation of a continued bearish move. Since we formed another low right here, this is now a lower high, and here, and this right here is a lower low. So if we were to run this level once more, we are trading in towards and above the 0.5 level. And we're using this high right here. We have rejected against the 0.5 level. So what does this mean? What this means is we are approaching a level of discount. Okay, we are no longer at a level of premium. We are approaching a level of discount with the daily trend. Okay, and yeah, this pullback is in the technical point of view is positive for a continuation, but with gold we have to take into account the overall macro play. Okay, so in the technical point of view, we are trending bullish on the lower time frames. If we are looking into the 4-hour, just one time frame lower than the daily, we have already formed a change of character here, a break of structure here, and a further break of structure right here. Okay, currently we have formed the 4-hour break of structure. Now this translates as well in towards the hourly and the 15-minute. Okay, so that means most of the higher time frames we are bullish. Okay, we are bullish. Basing everything on a technical point of view, we are very, very bullish. On the hourly chart, of course, we have a fair value level. The gap has been totally filled. We have filled the gap, so there is no reason for price to push lower in towards the gap level. Okay, with that said, we are monitoring this level right here on the 15-minute level, on the 15-minute time frame. If we are pushing lower into the 15-minute time frame, this will be our second buy zone right here. This level of imbalance or fair value gap is our second level of buys. But I am preferring this level right here. Best case scenario for a trend continuation trade, we are looking at a sweep of the Asian low and a sweep of the 15-minute 0.5 range, and a displacement higher, back into the 0.5 and the Asian high, ultimately targeting big round numbers at the 4900 level and the 5000 level. Okay, so the trend is obviously a buy trend. As of now, we are waiting for external liquidity to be taken, okay, marking out our Asian lows and our Asian highs. What I want to see is this to form. However, the second buy zone right here, this fair value level, is a level of multiple confluences. If we are looking at this level, we are overlapping the 4-hour inverse fair value level, which is also time frame aligned with the 15-minute. So this could also be a good buy level, which is also an OTE level off of this daily opening range right here. The daily opening range, taking it from this swing low to this swing high. This it overlaps with the OTE level. So two ways price can go. If we trade lower, I'll look for reversals here. And the best way I can see price run is, the third scenario I can see price run is a run against the Asian highs right here. So a break above the 0.5 level of the daily external range and a run against the Asian highs. I would then look for continuation buys and possibly fresh internal liquidity to take buys off of. Okay, so as of now, for me, it's a waiting game. I'm not looking to take any positions until we sweep the Asian lows or we run the Asian highs. If we do not sweep the Asian low, meaning we close strongly against the Asian lows, I would then look for the fair value level right here, coupled with the OTE Fibonacci, to look for buys in towards that daily external range. Three scenarios for us, all of them are looking for buys. Unless the ceasefire holds for, breaks suddenly with a headline. Okay, if that happens, I would then look for sells. Okay, because the bias or the narrative or the rhetoric would immediately flip, and we are no stranger to a flipped rhetoric. Okay, with gold being so sensitive to price recently, where we are not surprised. We should not be surprised of that at all. We should anticipate it, but in the meantime, we trade with what information we have, and we follow the technical trend. Okay, with that, I hope all of us have a very, very profitable day